Well, for the best possible insight on those earnings, let's talk to WPP's Chief Executive. Martin Sorrell is at the London Stock Exchange. Sir Martin, great to speak to you as always.
Good morning, Francine.
Good morning to you. Talk to me a little bit about the prospects for Europe, because this week we had this EU debt deal. I wonder how concerned you are that the EU leaders sure have the political will, but at the end of the day, we're not going to grow. We're still risking a recession, and the people in charge are just not doing enough. And that, at the end of the day, will, of course, have an impact on your bottom line.
Well, I think you have to be practical about it, and politicians are in business to be re-elected. There are a number of elections coming up in Europe, in France and Germany and elsewhere, the United States as well. So they're not likely to do anything exceedingly unpleasant in front of those elections. And we have a deal in principle. The words in principle are spattered throughout the statements, and I'm sure the detail will get worked out. It's painful. But I think in the meantime, those of us who've got to try and run a business have to get on with our lives, and we just can't wait for that. Now, Western Europe, interesting, Western continental Europe, because the UK has been quite strong. In fact, at the gross margin level, we're showing double-digit growth in the first 9 months of this year.
Yeah.
The Western Europe, Western continental Europe, is showing some signs of dead cat bounce in the sense that it's got a little bit better from very low levels as we've gone through the year. That's going to continue into the fourth quarter and next year. And if I look at next year, Goldman are forecasting, I think, 3.5% GDP growth. You have to disaggregate that for BRICS and Next 11. For those are the top rate of growth. Then you've got Germany, maybe in the United States, second rate of growth or second fastest. Third fastest would be the UK, France, Italy and Spain, and then slowest probably Japan, although Japan is recovering from the restructuring expense that or investment that's been made after the terrible events. So there's varying degrees of growth. We've got the three big events, the Olympics, the European Football Championships, the US presidential election in 2012. So I feel really pretty much okay about 2012. We'll probably see 4% industry growth. That's good enough. You'll see the other part of our statement is about margins, Francine. We're improving our margins. It was a half a margin point in the budget. It was 0.7 of a margin point in the first half, and we're indicating it's more than that for the full year. So we feel pretty good about the profitability.
I want to ask you something on 2012, but in the emerging markets, because Are you ruling out a recession completely? At the moment, we seem to we'll expect basically slow growth, but what happens if we do have a recession?
Well, you call emerging markets. These have emerged, Francine. I mean, China is the second largest economy in the world. It's our fourth largest market. India, in my view, has emerged, and Brazil has emerged as well. Russia is also, we're very bullish about. So they've emerged, and they're up there, and we're looking for growth. 75% of our growth in the first 9 months of the year is coming from the faster growth markets, the BRICS and Next 11. My view is that we're seeing more and more trade between these countries. We're seeing the 12th five-year plan in China emphasized consumption and a switch away from savings. There's a healthcare safety net for the consumers in China now that the government has been putting into place. So I think the pattern is going to change. We'll see what happens in terms of the Eurozone restructuring and China's participation in it.
Yeah.
If they do participate, I'm sure they will demand and get concessions from Europe. If they want China's support and its reserve support, there'll be concessions. I think they're arguing about 9.1% growth in China. In India, they're arguing about 7 or 8%. We give our eye teeth for that. So I don't think we should knock it. I think we should try and support it, and I think we should try and invest it. Certainly, I've got to tell you, our clients,
Sir Martin,
most of our clients have China as their biggest market or their second biggest market.
Talk to me a little bit about your acquisitions for the future, because you've done at least 24 acquisitions so far this year.
Right.
What happens in 2012?
Well, I think we'll continue, Francine. We've got a very strong pipeline of small and medium-sized acquisitions fitting into our strategy of new markets, new media and consumer insight. Having said that, we see some still overpricing in internet and new media in the US. Brazil is an overbought, I think, industry as far as we're concerned for the moment. But with those two exceptions, we're seeing a lot of activity, a lot of opportunity. In fact, pricing to some extent has come down. We haven't seen a total adjustment to what's been happening in the stock markets, in the private market, but there are lots of good opportunities, single-digit multiples over 5 years, 5-year earn-out. So quite attractive, still attractive. And as you see, our pace of acquisition growth grew in the third quarter up to just under 4%. So it's going to play a role in what we do next year as well. But we're going to balance that. Capital expenditure is not significant in the context of our business and its nature, but we're going to balance that with dividend growth, which you've seen we're increasing the payout ratio to 40% over time, and of course buyback of stock, and where we see anomalies in valuation, which we've seen in the last couple of months, we've been buying the stock quite aggressively.
Now, you've given us a great overview of the company and you know what 2012 will bring. Give me your biggest concern for the next couple of months or into 2012. You were saying, you know, the US presidential election. We have also elections in France, the Olympics. You're fine for 2012. What happens after that? And what is the thing that worries you the most?
I think the biggest concern is the US deficit. I mean, I think that is the gorilla in the room, and people's attention has been taken off it because there was the deal done, the committee's in place, it's got a target, what was it, 1.4 trillion deficit reduction. People are hoping for more. If they can't agree on where the 1.4 trillion comes from, it just kicks in automatically until after the election. So they've very effectively kicked the can down the road post the election. And my concern is what happens after that. I was at the Business Council in Atlanta last week, and what surprised me, there was some gloom, but what surprised me was there was relative bullishness about the American economy. What the American CEOs are basically saying is they know what needs to be done.
They just need to go and do it.
They have to go and do it. And I think after the election, I mean, the problem we're going to have is if President Obama gets re-elected, which I think is probably the outcome, and the Republicans will control both houses, that's where you get this deadlock again. Yeah. Maybe with a second term, President Obama will be more expansive. We'll see. But I think that's the thing that worries me most.
Sir Martin?
We'll muddle through in Europe anyway.
All right.
I hope.
A glimpse of hope. Thank you so much, Sir Martin Sorrell,
Thank you very much.
Chief Executive of WPP.